This is SDE4. It's said to be the first net zero energy building in Singapore that was built from scratch. Net zero means the building consumes only as much energy as it produces on site, such as by harnessing solar energy. The building is part of NUS's growing pool of green projects.
They were very careful in designing the building so as to minimize energy consumption as much as possible. He has received an international certification, that is the WELL certification at the gold level. It is the first university in the world to receive this certification, and it is also the first building in Singapore to receive WELL certifications.
To fund such sustainable projects, NUS recently issued its first green bond. This is a financial instrument designed to have environmental or climate-related benefits. The placement was successful, raising 300 million Singapore dollars. However, in the broader market, economic effects of the pandemic saw green debt issuance slow down in the first half of this year.
The first half of this year has been a bit challenging, but we expect that the strong growth of the green bond market will continue, and especially in ASEAN, where the markets are really strong in terms of accessing capital to finance the growth in a sustainable manner. Regulators are fully behind it. Governments are also on the way to issue sovereign securities as well.
Green bond issuance has declined in our region over the past 8 months, but the pandemic has not reversed long-term climate change or the market's drive to address that. When the economies recover, the borrowers are going to need credit to rebuild their capacity. Therefore, I don't think green financing's prospects has diminished in any way.
Globally, green bond and loan issuance surged by over 50% to $258 billion in 2019 from the previous year. While in ASEAN, total issuance almost doubled to $8 billion over the same period.
Green bonds are proving very popular with investors. We see very large oversubscriptions when a green bond gets issued. For example, the BTS group in Bangkok told us that they were able to attract 30% more investors than a normal bond. The Republic of Indonesia also said that their access to global investors increased as a result of the green sukuk that they issued. So this is very encouraging.
The trend for sustainable finance is increasing, and we haven't seen any slowing down even with the pandemic. I believe that's because this pressure to tackle the short term is really being counterweighted by the challenge of long-term sustainable development. And there is now a lot of the narrative around stakeholder capitalism. The private sector has really woken up, and if you want to future-proof your operations, if you want customers to continue buying your products and services, being sustainable is almost a given.
Within the region, Singapore is taking the lead when it comes to green financing. The city-state contributed to slightly more than half of the total amount of green debt issued in ASEAN last year.
As a bank, we saw lots of green investment opportunities to address the global challenges, including renewable energy, energy efficiency projects, clean transportation, green buildings, and so much more. Many of the transactions we have done in 2020 are from the same clients we have done deals for before. So it's increasingly evident that once corporates embark on their green strategies, they tend to stay on this journey. Sustainable finance is now, I would say, mainstream.
What we've seen is, in the beginning, a lot of customers would consider green bond or social bond issuances only because there are marketing benefits. That mindset is evolving because now we always advise customers that if you're doing a social bond or green bond issuance, it's a golden opportunity for you to communicate your vision, your strategy, what you're intending to do about climate change and about environmental and social issues in one issuance.
Analysts say that while investing in green bonds may not be high risk, caution must still be exercised. Investors must also guard against the risk of greenwashing.
Greenwashing was a fair concern at the beginning of the market from investors, where they were uncertain if the projects that were being selected were truly aligned with a greener future. But since then, since the Paris Agreement has been signed and these standards have emerged to exactly define which are the green projects, like the climate bond standards has been developed with scientific input from a variety of people. This greenwashing has subsided because the standards that are available are stricter.
For now, amid growing demand for green finance, analysts say we're likely to continue to see more issuers like NUS raise funds through green bonds.
We reckon that with the experience that we had in the recent issuance, that there is a strong and growing appetite amongst the investors who wants to make sure that part of their investment portfolio is linked to sustainability financing. So if we do not issue a green bond, we would miss the opportunity, I'm sure of that.